Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at, as per the title of this video, two major dangers that are lurking in the Bitcoin chart. So while the long-term outlook for Bitcoin is bullish, and it seems we have quite a number of months still to go for the end of the bull market, the short-term picture seems to have taken a bearish outlook. So we'll have a look at that, and we'll also have a look at what's going on in the news, the wider markets, and of course the 60-day cycle to see exactly what Bitcoin is doing from a cycles perspective. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So in last week's video, I had a look at these indicators for the end of the bull market, and we showed quite clearly with those indicators that the long-term outlook for Bitcoin is to the upside, and we've come nowhere close to the end of the bull market. So the long-term picture for Bitcoin still looks incredibly bullish. So while the long-term picture may look bullish, we do have a few concerns in the shorter term, i.e. in the next few months. And this is what we're going to have a look at as the main theme of this video today. And the first danger I want to have a look at is the one on the monthly time frame. And it's this candle here with 2 days to go. So we haven't actually come to the conclusion of this yet. So this could quite easily turn into a completely different candle, and many times you'll notice this, that right up to the last bit of the time frame, the shape and nature of the candles can change. So with today and tomorrow still to go, we can only look at what it is showing currently, and that is that it's showing a gravestone doji candle here, and these normally at the top of a trend usually signal a reversal sign or a consolidation sign for further downwards movements here. So what is the gravestone doji candle? This is what we want to have a look at, and the main thing to understand here is that a gravestone doji candle is a pattern that occurs in technical analysis, and it's actually a bearish pattern that suggests a reversal followed by a downtrend in the price action. And what people do is they use this particular pattern as a sign to take profits on a bullish position or enter a bearish trade. And if we scroll down here, we'll have a look at exactly what this looks like. So we can see that at the top of the trend, we've got this candle here, which has got a long wick at the top, a little body in the middle, and a little bit of a wick at the bottom. And this brought the price down here. And another one here, this is more of a classic gravestone doji candle with a long wick at the top with a very small body. This tends to be even more powerful, and it brought the price down by quite a bit. So this is the power of the gravestone doji candle, and a similar candle to that is called the shooting star. As you can see, this is just a little variation of the gravestone doji candle, but the main characteristic of it, with a long wick at the top, with a slightly bigger body and a little wick at the bottom, the main characteristic remains the same, and that is that it remains a bearish signal to the downside. So as the definition says here, it indicates a potential trend reversal. So always remember, it's a potential, it doesn't have to happen. And we'll have a look at the wider context to see how it fits in with that in terms of what the probability is of it playing to the downside. And if we scroll down here, we'll have a look at exactly what the chart looks like with this particular type of a shooting star pattern. So once again, as you can see, if we end up with this shooting star pattern on the candlestick, again, it has a potential to bring the price down. So this is what tends to happen, but in the longer picture you can see it's more of a consolidation to the downside, a bit like what we've just had for 8-9 months before we move back to the main trajectory of the bull market. We can judge the strength of this particular candle by looking at the volume down here, and you can see quite clearly that the volume in relation to what's happened here is actually quite low. So the strength of this playing out is invalidated to some extent by the fact that the volume is on the low side here. So while we can still go and have a consolidation for a few months, the volume takes the sting out of this candle a little bit. And if we have a look at the history of this particular candle on the monthly time frame, there aren't a lot of examples of this at the top of a trend, but we did get something a bit similar here at the 69,000, where the price started coming back down. But this one was more of a spinning top, which was an indecision candle rather than a gravestone doji candle. And the context of this was that we were at the end of the 4-year cycle here, whereas at this moment, we're not at the end of the 4-year cycle. So context is everything. And if you look down here, very similar candle, which was at the top of this trend, but this one didn't play out. We got a green candle afterwards. But this one here, we had 2 of them back in July and August in 2019, and these did play out to the downside. And if we look further back, we got this one here, which is at the top of this trend here. And because we were not at the end of the 4-year cycle, which ended here eventually in December 2017, so again, the context is important. So while we get it at the top of a trend, it was followed by a consolidation candle here, which gave us a long wick at the bottom, which meant that the momentum was to the upside here after this particular bearish candle. And that drove the price to the end of the bull market in December 2017. So different examples, context is very important, volume is important, but certainly something to be aware of in terms of expectation. If everybody's expecting this to keep going up, this may not be possible, because this is giving us a sign that the chances are, the probability is that we may well be going sideways for a while. Now, it doesn't mean that just because we've got this candle here, that the next one's going to be much lower, etc. Because what we do tend to get as a pattern, as a response to this kind of a candle, is that the next candle has a habit of running up the wick of this candle. So it may get rejected one more time at the 108 before a consolidation takes place. So very important to understand that the chances are that we're not going to close above the 108 if we close this candle here in December as a shooting star or a gravestone doji candle. The probability is more to the side of a consolidation, either sideways or slightly to the downside, to give you another bull flag at the top here. So this is what it looks like. It may well be forming. So this is the first danger that's lurking in the charts. But once again, we haven't closed this yet. If we close like this at the end of the month, tomorrow, so I've shown you the possibilities of how this may well play out. The second danger I want to show is on the daily chart, and that is that if you look at the neckline that's been forming here at the $92,000 mark, we do have a head and shoulders pattern developing here. And at the top of a trend, you would expect this to have a strong bearing and a breakdown to the downside. And what we've got with the classical head and shoulders pattern is that this is a bearish signal, and it suggests that the bulls, i.e. the buyers here, who initially drove the price up, which was the left shoulder, become exhausted. They managed to push the price higher again, which is the head, i.e. the price going higher than the left shoulder, but the lack of the strength to maintain the rally, i.e. the right shoulder, then breaks down to the downside. So this is what the potential is here of this head and shoulders pattern. So it's something to worry about. But once again, if you look at the volume here, what we do have is that from the left shoulder, we have a higher volume, which is falling, and even at the head, which you would have expected with our rising market, the volume would have been greater than the left shoulder here. What we've got is a falling volume. So in context with that, while this is a very strong pattern which should play to the downside, the volume takes the edge away a little bit. So just need to put everything into context. And when we analyze the 60-day cycle, I want to come back to this long-legged doji candle here, which is still proving to be an incredibly powerful force in all the subsequent price action that we've had so far since it printed here back on the 5th of December. And if we move on to the news, we notice something here that Michael Saylor from MicroStrategy is hinting at impending purchases. And this is really based on the fact that in the last few days they've requested to increase the authorized shares of MSTR to 10.33 billion, which aligns with their Bitcoin accumulation strategy. So they're obviously very much of the opinion that we have a long way to go for the bull market. And this number of shares, the 10.33 billion that they want to authorize, the amount they want to increase is around about 31 times its current levels. And if they end up utilizing this, what it's really showing is an incredible intention to buy a huge amounts of Bitcoin going forward. So this kind of news with just one company intending to purchase Bitcoins at such a pace would suggest that the price of Bitcoin would be underpinned by such demand out there. And if we have a look at the liquidation heat map, look at the stops for the leverage players, what we've got is some strong support here at 92,000. and this has been the key level as we've been mentioning here on this channel for the last few weeks. So there's some real strong support. This would suggest that the price should bounce. If it does come down to the 92,000, it should have a strong bounce back up to the upper side, and at the upper range we're at 94,700. So this is where in the immediate short term price should be bouncing from around 92,000 and reaching the highs of 94,700. And if we have a look at the Bitcoin ETF overview by looking at the asset inflows and outflows, a changing picture seems to be emerging. As we've seen in the last few weeks, these have been at record levels in terms of the inflows, and at the moment we're just taking a little bit of a breather. As we can see, a lot of red numbers now are starting to appear. And so the outflows are just now edging out the inflows. So this is obviously contributing to the current bearish picture on the charts. And if we have a look at the wider markets, we can have a look at the dollar, which is giving us a bullish picture for the dollar in terms of closing last week above this very key level here at around about 107. So we did close above that, and currently we're just consolidating within that range over here. So let's see how this plays out. But as you've seen here, as the dollar has risen, it has correlated well with the wider markets, which is not something you would expect, but it is something that does happen. And the interesting thing to keep a note on here is the RSI at the bottom is that we're making a lower high, whereas we made a higher high on the price action. So that would suggest a topping out, a double top for the dollar, and an expectation for this to come further down. So let's see how this plays out, but certainly the RSI is suggesting that the trajectory is going to be turning around more to the downside. Now, interesting developments on the SPX. Just like Bitcoin, we seem to be getting a head and shoulders pattern developing. We're not quite there yet, but we've just broken this key level here. So I would expect for this to come back down and retest this level here. And if we do that, then we would get the full completion of the head and shoulders pattern. And that would suggest that we would, going into the 60-day cycle low here, which would be around about the end of January, we may be making a deeper correction back down to these levels here at around about 56. So not a good sign for the SPX at the moment. And moving on to gold, we see this symmetrical pattern still playing out. We're still contained well within this pattern here. And we're making the lower highs from the top here and making the higher lows from these strong support levels here. And what we're waiting for is a resolution to this pattern. And because it's actually a continuation pattern, this is what you would expect in a bull market. We are at the lower levels at the moment, so we would expect something like a move to the upside before a breakout. So gold is looking still quite bullish, and similarly for silver, it's forming a very similar pattern. We have topped out here and making the lower highs but also the higher lows, and you would expect with a continuation pattern for this to break to the upside. So both gold and silver on the whole with their trajectory look to be still on the bullish trend. And moving on to the Bitcoin 60-day cycle, the end of the current cycle is due for the 3rd of January. So that's only just a few days away, but a lot of interesting developments here. And as I've just shown you, we do have a head and shoulders pattern developing, and we're right at the bottom of that trend here. And the pattern would suggest that we're going to break to the downside. But as I've shown you, the volume is on the lower side, which could save it from breaking down. And we have the small matter of this particular candle, as I've just shown you, which is the long-legged doji candle. And we've marked this range from the bottom of that candle to the top of that candle. And the range of that candle is 103 at the top and 92,000 at the bottom. And our narrative was that the subsequent candles will probably more than likely play to the tune of the highs and the lows of that long-legged doji candle, which is what it seems to be still doing along the way. So we're still within that range, and we did have a narrative of a fake out to the top, which is what happened here. And there's also the prospect of a fake out to the downside as well. This is what characterizes these long-legged doji candles. But obviously this doesn't have to be a fake out. This could be a proper move to the downside. And what we got recently was this dragonfly doji candle, which was a bullish candle at the bottom of a trend. Now the power of that would have been normally to take this to the beginning of a new cycle. So that would have been the start of a new cycle. However, to confirm this as the start of a new cycle, i.e. an early cycle, which from the cycle's point of view would have been on day 46. So that was well within the realms of an early cycle starting when you get a candle like this. But what we needed to do, as mentioned previously, was to get above the previous candle here, the high of which was at 102,747. So this candle really needed to push the price action above this level to confirm this as the start of a new early cycle. However, we went as high as 99,500 here and got rejected at that point. And what we've done is we've consolidated in this range at the lower end. So it could still be that we're just running down the wick of this dragonfly doji candle, as we haven't actually broken below it. So this is still playing out within this narrow band here of the price action. And this will only come to the conclusion once we break up above the dragonfly doji candle and avoid the drop down here. But certainly on balance, with this head and shoulders pattern developing, and the fact that we're coming to retest this here and we failed to make a new high above the 102,000, those factors would suggest that with the impending end of the cycle on the 3rd, we may get a very sharp correction to the downside. Then what we have is then these levels coming into play, the 85,000 at the bottom of this trend here, and should this break, then 73,000, the previous resistance point, 73,800, comes into view. So while I wouldn't expect it to come back down to these levels, we are deeper into the cycle here. We could get a sharp correction all the way down to the 85 here before the start of a new cycle. So we're getting deeper into the cycle. We haven't confirmed an early cycle, so the balance is now shifted towards the end of the cycle correction down to the $85,000 mark. That's the first target that we've got here. Should this break, and if Bitcoin wants to shake out the weak hands even further, then the 73,800 comes into view here. So obviously this is not what anybody wants to hear, but we have to be realistic and take a balanced view of both sides of the picture. But if we go into the weekly time frame, it is giving us quite a nice picture of a strong support currently within this price. If we put on the 3 EMAs here, the first one being the 8 EMA, the 8 exponential moving average, the blue line, the 21, which is the yellow line, and the 34, which is the white line. Please remember, this is not the 3 exponential moving average. These are 3 different exponential moving average, the 8, the 21, and the 34. And these are the settings there, as you can see, the 8, the 21, and the 34. And we can see quite clearly that since we broke out here in September, we found continuous support on this line all the way through the rise that we've had from the 60,000 mark here. And currently we're finding incredible support on the blue line, the 8 exponential moving average. And this would suggest that on the weekly time frame at least, that we're coming to a strong support and we should now get a bounce here. But should that break, then the 21 is currently at the moment at 81, but obviously in a few weeks time this is a rising market and this would come up to the 85,000 as I've just pointed out. And if we put on the Bollinger Bands, they always give us a very nice alternative picture of where the price action is in relation to the averages. And we can see that whenever we have a period of time where we start to push the upper level of the Bollinger Band, we do have a period of consolidation coming in to take the heat out of the rallies. You can see what's happened here, and then once more time, when we broke above the upper Bollinger Band, again, it comes back inside the range. So this is what's happening one more time. We've overextended ourselves above the Bollinger Bands, and now we're just coming back in, just like over here, just like over here, just like over here. Time and time again, this happens before the move to the upside here, over here, over here, and hopefully over here for the next leg of the bull market. So in conclusion, what we can say is that we do have the prospect of a bearish candle picture developing here. The shooting star or the gravestone doji candle, let's see how this turns out to be. But the characteristic of this is that we should get some sort of a consolidation here, just like we got over at this point. We could have another extended consolidation pattern before we break to the next leg of the bull market. And of course we've got this head and shoulders pattern which could well break down to the downside. But as we've seen with the volumes wouldn't really confirm that, so that could well be our savior from a further downturn in the market for Bitcoin. Although this is not what we want to hear, in terms of a continuation of the current bull market to the top where we want to get to sometime towards the end of the next year, then we can see that whenever we have rises, we do need these consolidation periods in order to continue the market to the upside. So this is what we would expect, and it would be healthy for the market that having broken out from the 73,000 all the way up to the 108,000, a period of consolidation from a technical chart point of view would actually be quite healthy for the continuation of the bull market. And for those of you who are interested in our portfolio that we run on the private member section with the Bitcoin miners, as we've seen with the Bitcoin price, the Bitcoin miners have actually come down quite a bit relatively. So this figure here of 513,215 was just 3 weeks ago at 726,000. So this has obviously come down quite a bit. So up to last week here, we're now down to 513,000. But overall, in the whole of the cycle, we did start off with $100,000, which has now progressed to 513. So from there, from the beginning of 2023, we have done really, really well. But 2024 has not proved to be a great year for us, because in this year, the price for the Bitcoin miners has only gone up by 18%. Whilst during 2023, the portfolio from the 100,000 had gone up by 300%. And our target still remains intact at 5 million for the end of the bull market. So we'll see if this is going to be achievable, but certainly at this point, we would need a 10x on the Bitcoin miners from 513 to get to the 5 million. And if you're interested in joining us on the private member section, then all you have to do is go to any of our videos, and you'll see here that we do members only videos on a Wednesday and a Friday to cover Bitcoin and the Bitcoin miners. And if you want to join us with the private members section, which covers the Bitcoin miners, then all you have to do is below any of my videos, you can click the join button here, or in the description box, there's another button here as well. If you're on a handheld device, you might not see this join button, but if you go into the description box, you'll see this button here. And what we do there is that on a daily basis, at the end of the trading session, we do market updates Monday to Friday to bring everybody up to date exactly what's happened on the day with the Bitcoin miners and Bitcoin. And also we do a dedicated video on a Wednesday and a Friday. And the price of all that is just one coffee per week at $12.99 per month. So everybody's welcome to join us on that journey from where we are currently to the end of the bull market, where we expect it to be around about September, October next year. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.